Hey guys, it's Will. Hopefully, you're having a great day today. It is Monday, and we're just past market close, and APLD stock absolutely ripped up to about $24.50. So, Applied Digital, APLD stock, just ripped again over 20% today. Okay, so while one thing we're going to be watching here, right, and I want to make sure we get into the right track from the start here. When a stock makes this kind of move and it surges to over $20, this is the type of signals and moves we've been watching pretty closely. And we've been following APLD for a while. But one thing I want to address in the beginning of the video, some of you guys know we have our StockMate daily live trading sessions. And we go live every morning. And I had a member recently say, Will, is this an evergreen timer that you have? And I thought it's a perfect time to address it. So for those of you guys that don't know, we go live every morning at market open. We have targets for the upcoming weeks with all the targets when companies are reporting earnings. There's about a 30-minute to an hour-long session in the morning. I send everyone a free t-shirt. We have a team that builds into the press releases, but also we have a community of over 24 individuals with a net worth of over $1 million. And you could see that we have this page here. So this is our offer page. Now, sometimes we have a timer here, and I just want to be very clear. We run individual sales. Sometimes we close lifetime access where you can't get lifetime access to the daily live trading. Sometimes we have the data center sale we're running right now, which we specify, not always up here in the timer. A lot of times where we specify it is down at the pricing in the code entry here, data center boom code. And we use the same code for congruency. And then some people say some person recently who is a StockMate in our group said, Will, what's going on down here? If I have questions or concerns, and it says you have access to the private Discord. Now, in all of our marketing of StockMate, I always show you guys this whole area where we conversate, right, in the mornings. And people send me messages and chats, and you can see the daily live trading along with the calendar so you don't miss the live trading session in the morning. And the reason I bring this up right now is because we don't do Discord anymore. And I have to update the page down there where it says Discord. The reason we don't do Discord is because hype, it attracts the wrong people that are just wanting to know what to buy, which stock to buy, why they should get in, the signals. Discord does not attract the right type of investors that we like to work with. We like to work with investors that are bringing insights, that are looking for long-term investments that they can also trade on the short term, and that they're not around pump and dumps or things like that, right? So I wanted to go over that. The other thing we have, sometimes we run sales where you can get stock. If you get StockMates and a certain company hits a certain target, then you can get a good deal. And so sometimes those stay there, but you'll always notice that the time frame is there, that you need to enter the sale. So some people are like, well, I thought I was getting the sale. You always notice the time frame there. And so if you're not entered by that time frame, just keep that in mind. So I do that because I want you guys to know, and I share this here. So I want you guys to know that I'm not in any way wanting to, do I have to do marketing or our team do marketing? Sure, we do marketing. It's part of running a business, 100%. But I never want to do marketing that is not of integrity. So that's why I share it with you guys. So you guys know everything that you see here. I can show you the remote investing blueprint, daily live trading. Everybody that's here, they know, they get it. Fundamentals, news, earnings, all this stuff, technical analysis. We have some program books. All the things mentioned here, we get, you get. All the testimonials, they're real. They're real people. They're real screenshots from members. All of it is 100% of congruence and integrity. I won't do fake timers. I won't do fake scarcity. If we're closing, we're closing. We closed the lifetime access. We closed it 100%. Okay, and then we reopened it because of the Kevin says pearly white teeth. That's funny, right? the demand for the lifetime access. So that's why I share that with you guys. Hopefully that makes sense. I had a customer today tell me that he really wasn't happy with our marketing. I said, everything we have here is 100% accurate. And then we looked at it and said, okay, Discord, we don't do Discord. We do a better group now. We have this group here, which is better in my eyes. And it stays away from the hype. But yeah, anyway, I wanted to let you know that's what we got going here. And that's how StockMate works. That's what you're getting when you get StockMate. Hopefully that makes sense. All right. APLD is up 19% today. This is what we were looking at this morning. And we've been trading this one off and on for really a couple months now. We got some long-term positions. Look at that market cap build. We see it jump from $2 really back in earlier 2025. It was at $2 a share in April, or maybe it was $3.30. So just over $2, $3 a share, and it surged and continued to surge up to $25 today as we see it reach these highs we have not seen since back in 2021. So there's some good comments, shadows on APLD. I saw some comments people made over like 80 or 100% on our APLD investments. Awesome. Jason says, what a great day to be an APLD soldier. That's right, Jason. Cheers, man. Cheers. CTM moved decent. I think CTM was up as well this morning. That's a longer term hold we have as well with CTM. They were up about 6% throughout the day. I don't know how they ended up ending the day today. Oh, 9.5%. That's great. Okay. And then Patty says, evening geezer. Thanks for the insights on Rigetti a few months back. Tony says, thanks, Tony, for tuning in. Yeah, we started covering Rigetti around $1 a share. That's what it's all about. Tony, I'm glad you're able to make some gains. So Jonathan Britton says, I knew Castellan would move after all the hacking incidents. Yep, cybersecurity for the U.S. government is a big deal, and that's why they're growing. They also have contracts, CTM, that are larger than their current market cap. So let's jump into APLD. I wanted to jump into it. I wanted to address that we don't do. It's not my goal to do any crazy marketing. Guys, I spend enough time investing all day long and reading companies and analyzing stocks, or working on our software company here where you could search a stock. We could search, let's pull up APLD while we're here. We got our new models, Grok. Now we have Claude and Gemini. This is our software company. I got enough time working on this thing to worry about marketing, right? I mean, yeah, we do marketing for sure, but anyway, I bring that up this morning because someone was saying that they weren't happy with the marketing on StockMate. And I thought, man, everything in StockMate is what you get, and our testimonials show that. And so that's why I bring it up today. Now, they have some outlooks according to GPT here. Strong resistance at $25 may act as a psychological barrier for APLD. I think that's pretty true. We could see this analysis, though, still projecting APLD to get up to about $28 a share or more, 15% or more over the next 6 months. Now, let's see if there's any corrections in the next hour. It looks like we have some potential corrections in APLD. Next hour here, next 4 hours, potential correction. Even the next day is projected to correct about 2%, but the next week is looking green about 2%. So APLD builds data centers, okay? And you see Kevin says he's up 144% on APLD. I love to see that. Postman says, I grabbed some leaps back when it fell from 15 to 10 and couldn't be happier with the returns. I was researching it, and it's now came across your channel. Awesome. It's how you came across our channel. Awesome. So one of the reasons we like Applied Digital, AI infrastructure is one thing. It's kind of like the real estate of Manhattan in the 1920s. Building data centers is like constructing the real estate of AI for what will be a massive boom of New York City, right? But this is of the AI boom. And we're looking at this early moves from early movers in the data center space. This company specializes in building data centers, and bringing the points of generation. So we are looking at the wind turbines, the solar, directly to the data centers. And the reason that's so powerful, I was literally just researching for us to run our own data center, a mini data center. Like I might get a rack here in California in our office. Or I guess it would be in this kitchen here or right next to us, where we have racks to run our own servers, because it could be really expensive for me to go and say, okay, let's see what Grok has to say about this stock. Now it's giving Grok analysis, querying, giving all the data. We're running inference models right now. It's expensive for power in California. It's expensive in other places, and places where it's hot, it becomes a problem. And APLD says, hey, we're going to build data centers in very strategically placed locations. They're doing liquid cooling, which is super efficient. They're building them for Super Microcomputer as a partner. So Super Microcomputer helps with the racking systems. NVIDIA, Dell, Intel, Hewlett Packard, and they're building them in really cold places. So cold places like North Dakota. This means they have to spend less on keeping the data center cold, which is definitely a thing. So APLD has been running up with this recent deal in about $11 billion. This one's $7 billion, but they extended it to $11 billion as their deal right now. And their market cap is at 5.8 billion. They surged another billion today. And so they're really just a fraction of what they could be based on the deals that they're signing. So we're looking for the revenue to catch up on their balance sheet as well, and see their balance sheet get back up there into that 2 to 5 billion to justify some of the valuation now. But really the deals justify the valuation. So institutional holding, massive increase, more institutions buy in today. And you see BlackRock most likely. I mean, if we look at the institutional holdings for APLD, let's see what it looks like for today. So institutional holdings of what's going on, more increased positions. They got BlackRock, Vanguard's a big buyer, along with Goldman Sachs. So you have more increased institutional buying. So now they're at this high right now. They've seen these highs before. They got a level of resistance at $25 a share. So now that they've trended up, I think we even have some drawings here. Let's see here. There we are. We were in this very consistent uptrend with APLD since, again, about April, when they found that bottom around $3.30. And they were continuing this uptrending pattern. And when we're looking at APLD, and Kevin says, by the way, there is a leveraged play for APLD that I wish I got on. I've seen that one, Kevin. Yeah, APLX. Yeah. I think if we're trading it short term, we'll probably look for APLX in the coming trading days if those opportunities continue to pop up. And then Tyler says, where do you see BBAI top off at this run? Nobody knows for sure, but would love your opinion. I appreciate that. I don't know for sure, so I'm not sure. All I could say is that it would seem that they're in a position where they're going to attract more institutional ownership. And that's why we've been covering. We have long-term positions. So we've been holding since last year. And we started covering it around $1 a share. So, I mean, if you just want my personal view on BBAI, there's never been a greater time for AI to be emerging than today. They're a company that's specialized in the defense sector. There's a few things working in their favor that could push them into that $10 range to $20 range, I believe. And those things are kind of like these, I don't want to say speculative because they have real world value. Like I just saw them at the airports when I was traveling to some conferences recently. But the big beautiful bill gets signed, so that's going to put a ton of money in defense. Then on top of that, you have the World Cup coming up, 2026. That's going to put some more spending on defense and immigration. Then you have the Olympics coming up. That's going to put some more money on defense, more money towards it. So I think if I had to pick a target, which I don't often, you know, I can't often do that because all I'm here is to provide you insights. Personally, the way that I hold it seems like it's a $20 to $30 stock. The way that I hold it, I just continue. I've held it from $2 up to 10 and back down to 2. So you're talking to somebody that basically just continues to buy dips on the stock and then trade the short-term plays. And I've become very familiar with how this stock moves on a shorter term basis and trading that, like this uptrend, for example, that my opinion could be, more biased in that I think that what we've seen in the past would relay into the future, right? But overall, if we look at things, how they're going to be operated 5 years from now, I would imagine they're going to be in a good spot. I would imagine they're going to be in that $20 to $30 range, if I had to guess. But again, I'm not here to do that. I'm really here to just provide you insights. I don't have any targets for you. I'm just here to give you, what would make sense from a probability standpoint, what would make sense from attracting institutional ownership or where the market's going. That's all I can give you, but I'm not here to, I think people get lost in me telling them like where stocks are at in the analysis and intertwine that with thinking that I'm saying what to buy, which is not in my agenda. It's not in my reasoning for why we have the channel. The reasoning is we love the stocks. We like to look at these really innovative industries, and we like to share what's happening in the industries, how that's going to also impact the stocks most likely. And that's what we like to do. So hopefully that makes sense. So APLD, we've seen APLD jump again. And now that it's broke out of this overall uptrend that we've been following for a few months, the next level is to the moon. No, actually, the next level is going to be that it looks overbought. RSI, MACD looks overbought at the moment. So you got to consider the overextension. But at this point, from a trading perspective, all that matters is a plan. So I can't tell you it might continue at $30, sure. But all that matters is that you have a plan, you got risk management in place, a stop loss set if you're in a short-term trade. If you're in a long-term trade, again, doesn't really matter. You can buy any point. Probably if it's this high up, dollar cost averaging would make sense. It really just depends on your goal, right? But from my perspective with APLD, I have some long-term positions in the stock that I just continue to hold, and I wouldn't buy more at the moment. And I would just look for probably another pullback before buying in. But then again, we have been covering it since further back around $3 a share. So it's kind of relative to that. Like long term, it doesn't really matter. You could buy it anywhere. Okay, so Patty says EVTL. Is there anything else that we didn't cover on Applied Digital? See, they signed the AI hyperscalers. They're building the data centers in North Dakota, and they are working with NVIDIA and most smaller and larger hyperscalers to build data centers in cold places. They've seen institutional buying. I don't know that there's a whole lot other than they have a resistance. Here we could see projected over the next few days to weeks, according to Mercatus, which we found to be quite accurate, is projecting a potential sell down of about 3 to 5% over the next week. But it's very bullish on the next few longer term timeframes. Had some correction. Oh, actually, Grok is actually more bearish, and they say that it could be historical buying interest is at highs right now, and it's likely to correct largely. So Grok is less bullish. It's interesting because when we look at OpenAI, and we're actually adding a feature model where you can compare the two, which is really cool. When we look at OpenAI, they were bullish. Grok is basically saying that this resistance level that it's at, $25, is where it peaked out at back in 2021 and 2022, and that it would be unlikely we see it continue and it's going to get rejected here and probably sell down into that $20 range, is what Grok was saying. That's kind of where I was at personally. I'm saying, it's up here, but this is what will change, and this is what will impact is those $11 billion deals that they signed, and the other $3 billion HPC campus, that the data centers that they're building with CoreWeave and what have you. If those come in, right, they signed those, but they're still only at 38 million in revenue. If those come in and increase their revenue, and they see, boom, in the next quarter they make $1 billion, this is easily, we're gonna see this stock at, I don't know, $50 a share, $60 a share, because essentially they are pricing into becoming a big data center building company. Does that make sense? But right now, with the current financials, current revenue, current amount of employees, frankly, at 205, their valuation now looks overbought. Now, if you factor in the deals that haven't shown up on the balance sheet, they look undervalued. It's just a matter of, okay, well, what more details do we have on those deals? Are we going to see it show up on the balance sheet? It's a 15-year lease term. Does that mean it's split over those 15 years, the 11 billion? Does that mean that they're going to, get a lump sum in the balloon payments, or is it going to start on like a yearly basis that they start getting paid for building these data centers? What is the way that they receive the capital? Because that will definitely make a lot of impact on where their stock's valued in the near term. So that's going to be a focus, APLD stock, for the next few days. They're up 20% today. And TSSI, which was the one we were watching this morning in our daily live trading session, it was up about 7% today. And I said, man, it's up 7%. We were just doing a top 5 data center company video on yesterday. And I was saying TSSI was one of our top, and that we were looking for this 32% move on TSSI to make its way up into about $22 a share. And it already made 15% of that today. So a tremendous feat for TSSI, already making that move. So tremendous. All right, so Patty, I appreciate you, Patty, for tuning in. Thanks, Kingston, for tuning in. Kingston says it's still a teen and bought $40 worth when it was at $14. Nice, congratulations. And Tyler, thanks for tuning in, guys. I appreciate you all. Really do love to see everybody winning and having some growth. Realize, now's a great time to put together some plans, put together some insight for yourself, because as I mentioned, when you see these big surges, value creation is huge in AI. It's huge. And data centers are a huge demand. But be ready, if it's a short-term trade, be ready to manage the risk. If it's a long-term play, be okay with not sizing your entire position in at once, and maybe dollar cost average, that can be okay as well. I tell you that because of the experience that I've had in these types of markets is that optimism's high. It's great. And there's also this really good time to celebrate, and then there's a time to be stoic and say, how much do we want this to impact us emotionally? And it's really funny. One of my best friends, it's an investor, and he works at Rocket Lab. He's a software engineer, and his name's Ben. And it's so funny because I'll talk to him about Tesla stock. And back when I worked at an institution, a financial institution in Boulder, and he worked at a rocket company over there, and we would drive to work every day. And at the time, I think it was 2022, and the market was dipping so much. Rates were going up. They were hiking the rates. The market was tanking, and Tesla stock was down to, I don't know, $100 a share or something like that. And he's been a long-term investor in Tesla since 2013, since we were, middle school or before that. And I remember he told me that I said, I would ask him every day, I'd say, man, Tesla is all-time lows. And he'd say, oh yeah, it is. Great. And he would buy it, you know? And then, and we were, I was kind of I learned those temperaments because he's a great investor. Then Tesla stock all-time high. I just meet with him the other day. We went to the All-In summit in LA just to go by at night. We didn't really do too much. We just kind of went by. It was over by USC down in Southern California. And we're walking down there and he says, and I told him, I said, Tesla's making its run to all-time highs. You know what he said? Great. I'll buy some more. So he's, it's the temperament. And so I tell you that because we see these APLD, TSI, quantum stocks. We have a position now, this shorter term trade, not even our longer term Schwab, that's up 170%. And so keeping temperament, keeping the emotions together. I don't say that to be like, look at us or anything like that. I'm just telling you, there's no difference in the highs as in the lows as far as how we manage the process. It's all the same. It's all the same. And so the dollar cost averaging, Patty says, is a lifesaver. Yeah, I appreciate the affirmation there, because I was just on a call just 2 minutes ago. Not even, well, I was 2 minutes, but right before this live session, I was on a call with Aaron, which he's a young man that lives in the UK and he's going to school to become a doctor. And I'm on the phone with him, consulting client, and he's telling me how he learned dollar cost averaging. He's very young, 20 years old or something, just out of high school. And he's telling me he just bought Big Bear AI right before the earnings crash. And we were talking today, and it's literally recovered all the way and higher to where it was before that earnings crash. But I remember everybody was here and they're saying, oh my gosh, because we were down, I don't know, $15,000 probably in that. And we were looking at it. I said, okay, we'll buy some more. We continue to cover. We'll look for the reversal. We'll see what it could do, right? And and he said that saved him because he stayed in it. When he told me that he bought before the earnings, my next question that I was thinking was, oh, Aaron, don't tell me. Don't tell me, Aaron, that you sold that stock, man. You're a one-on-one consulting client. I said, don't tell me that you sold that stock. He said, no, I didn't sell. He said, we're back to above even now. I said, oh, there we go. And so, but what did he learn? What he learned was that he said, I said, what would you do differently? He said, I now would dollar cost average. Because I plan to hold it longer. He said, I would just dollar cost average. And I said, there you go. It's the way to do it a lot of times when things feel high, feel low. So just keep that in mind. That's the approach. And then when it dips down extra, what do? We do shorter term trades. That's what we'll do. We saw AMD drop like 10% the other day, or we traded Big Bear on this bounce down here. When optimism was extremely low, institutions jumped in and scooped another $800 million over the next week after that dip, and we were able to swing it up. And so when it dips low, those are just when you might dollar cost average in a little bit heavier. That's kind of the approach. Sean McPherson says, I bought APLD. What's going on, Sean? I bought APLD and Rigetti. Now I think that was another mistake. Interesting. Did you just buy them? Because they are at all-time highs over on Rigetti. Is that what you're talking about? Or you bought it before? It's almost, there was a moment the past few days where I was looking at Rigetti and we joked, but someone in the chat said, like, as of right now, nobody is losing money on Rigetti stock because it was just into all-time highs, so it's good. So that's my question though. Did you get in now, or you let me know? Patty says portfolio's up 25%. Let's go, Patty. I'm excited for you. Thanks for tuning in. A name says, hell ye, what's going on, man? Let's go. It's a good day. Tyler says, have you seen SES AI? Seems like cheap energy company with NVIDIA partnerships. we have covered SES before. If I'm not mistaken, so they're at an all-time high, and we've done some corrections. We were looking for, it looks like we were bullish on this company back here. We followed their uptrend. It'd been a couple months. We saw them break some trends. We were looking for a 48% increase from this low. It took a long time, actually, about a month before they actually made that move, but they did make that 48% increase and more, up to about $1.85. If I'm not mistaken, SES AI financial reports, products, they do hardware, lithium metal innovation, SES. Let me take a look at the financials really quick. Tyler, or was that Tyler? Let me see. I think why we were a little hesitant on the stock was their net income. Net income super negative, revenue barely coming in at around 3.5 million per quarter. Not a lot of hype on the stock, I don't think, which is okay. Balance sheet kind of declining quarterly. How about annually? Yeah, kind of declining. See that assets bar dropping quarter over quarter, and their liabilities are actually up 12% year over year. So I think it was just a matter of kind of watching that they could still get up into that 500 million to $1 billion valuation, which they are at. They're actually further out there, or they're at 674 million. But now, if you look at them, I would say they're overbought at the moment. RSI, MACD are overbought. You also see that their assets have been actually decreasing slightly. So a little bit more risk right now, unless they had something come out recently from the press side of things that we missed. Let's go directly to CES, or not CES, SES. Latest news, closing of UZ Energy. So today, or about 4 days ago, they purchased a company, UZ Energy, and they are in the space of energy, AI-enabled safety and health systems, lithium battery developer and manufacturer headquartered in Boston, operations in Singapore, Shanghai, and Seoul, and accelerate its pace of innovation by utilizing super intelligent AI. Got it. Okay, so they are in a really good market. That's what's happening. They haven't seen the revenue show up yet. Their revenue is still down and negative net income. Balance sheet looks fine. PE ratio a little bit high, but the right market. We talk about it all the time. It's like the right market will make you more money than skill. And so this company is in the right market. That's why we see them stair step up. I would see them a little bit manipulated right now, and at all-time, or not all-time highs, but really up there, up about 80% over the last 17 days. If you got into it, same thing is true. You want to have a plan on the short term. Does that mean stops, clearly defined take profits, or long term? Doesn't matter. Continue to buy. But one thing to note about their recent move is this trend right here, because we do see this uptrend starting from that previous support resistance, and you have this here. I would imagine most institutions would be looking at the stock in this way, and you can kind of see this consistent uptrend looking like it's at a resistance, like we just pointed out, with more downside than upside. So if you're looking to buy it in a longer term play, you'd probably look for this previous resistance level at $1.50 that it found back in July, and then validate it again here in September. Around $1.50 might be a better entry on that one. Just kind of how I would approach it. It kind of just, if you want to get it at an all-time high, all power to you. I just think it's probably a lot more risk than what most investors would want to see. Awesome, guys. Dan Elton says, anything AI related is booming. It's true. You have to watch out and make sure the fundamentals are solid. And so that's where we're looking for fundamentals to line up on these companies. A lot of them have, if they're on this list, they probably have fairly solid fundamentals if they're on the list, because we usually just cover fundamentals. But we do have some speculative plays here and there that we watch for the shorter term plays. And Slash Angry Face says, do you know GOM Space? It's a Danish space stock. I do not. Trading $1.28. Think it can go high, but I'm pretty new to investment. I'll take a look at it. If you have the ticker symbol, GOM Space. Let's see if I could pull up the stock here. So they're not at $1.30. They're at $12.30. $2 billion market cap, and increasing revenue up to about 100 million a quarter, 45% increase in revenue. I would stay away from this stock personally, a name, and the reason why you might want to at least double check the financials is because their liabilities are greater than their assets right now. They're greater than their assets. So that is something to watch there. Cool. Yeah, but all power to you. I don't invest in companies where the liabilities are greater than the assets, because it usually could mean bankruptcy potential. So awesome. A name, thanks for tuning in. Mel says, what do you think of LAES? I think LAES is early and the financials haven't lined up yet. But in the very, very long term, if they get things right, being a cybersecurity company in quantum could pay dividends. GRRR, I think that stock's premise on what they're going for, like smart cities, is cool, but I think that they also have had a lot of manipulation over on GRRR, so I would also stay away from it personally. But if something changes, we can look at it. Or if they have not just articles about the total addressable market, or this is a potential deal, or announcing different partnerships without any contract values assigned to them, which is a little bit of a red flag. If they stopped doing those things and had some more concrete outlooks in their press releases, I'd probably be more interested in them, because I love smart city stuff. I think that's really cool. And I like the market they're in. That's probably why they've done fairly well as well. Slash Angry Face says, okay, thank you. Hey man, appreciate it. Thanks for tuning in. Aramel says Open. Yeah, so Open has had a tremendous run. Their financials were looking great, and that's what's going on. They took wholesaling real estate to a whole new level and started sending out massive campaigns on TVs of all Americans saying, want to sell your home? Call now for your offer, or scan the code for your offer. And then they started doing massive scale wholesale real estate, where they would either buy up properties or they would wholesale them at prices that were below market. And as a result, they've really grown. When it comes to their chart and stuff, if I'm not mistaken, they're just going straight up. Isn't that what's happening there? Oh, wow. Yeah, so last time we were looking at them, they were up here. We had this trend drawn. We were looking for them to get back down in these levels. In fact, we were watching this level of rising support, see that? And rising resistance here. And they were overvalued in our eyes. We said, it would make sense they sell back down to this previous resistance and down to the support level if it's healthy for them in their trend, which they have now sold down to $7.40 at one point, looks like. Yeah, wow. And so they've corrected down. Open stock has corrected. We haven't invested in it at all. In fact, we haven't done any videos on it because I thought they were overvalued early on here. And so we just didn't cover it. But now that they're back down to this rising support level, if they validate it around $7 and $8 and they start to, which it kind of looks like they're already doing that a little bit, or am I wrong? It kind of looks like it. So they had a big dip down to $7 and we see them start to validate it and potentially bounce, and they've already bounced from $7 back up to $8. So a little bit of a liquidity sweep possibly. People that had call options, I don't know if they came in with earnings either. I'm not really sure. But now they're looking a little more favorable on that overall uptrend that we're seeing there with open. Pat says, thank you so much for the video. Hey man, I appreciate it. Thanks for tuning in, Pat. Just trying to bring the insights to you, man. So I'm glad it's helpful for you. Phantom Thrifter says, CommScope is a great play on data centers, be giving special dividend in fees. Also, carrier symbol CARR have a cooling system for data centers. Got it. Okay, good to know. Let me write that down. Cool. Awesome, guys. Hey, I appreciate it. Thanks so much for tuning in, all of you guys here. Once again, that timer that is on StockMate, if you want to join our daily live trading sessions, get access to the community, and every single morning at Market Open, we're there in a private session. We have StockMate there. There is a timer on the page. It is not an evergreen timer. It is a real timer, and it is for our data center boom sale. If you want to go grab it, it's the second link in the description for learning fundamental technical analysis, how to invest in AI companies, data center companies, and also join on in to our live sessions that happen each and every morning. So again, it's the second link below, and I'll even send you a free t-shirt. Thank you guys so much for tuning in again. I appreciate you all. Hopefully you have a great rest of your Monday. I'll see you guys soon, and I'll see you in the next one. Take care. Also, smash the like button if we earned it, and do consider subscribing. Take care.